entertainment production. I don't know if you've heard film production, great strategy. So if you have not heard about it, look it up or come to me and I'll tell you more about how you can do it. But it's a great way. You invest in a film and you get a huge deduction, like dollars for every dollar you invest, you can get extra deduction. And so it's really great way to maximize your savings instead of paying to the IRS.
Here we go. Entrepreneurs, welcome back to That Entrepreneur Show. My name is Vincent A. Lancy, and if you're going through the show description, you may recognize her name because she is doing this incredible 10-part series with us, all to help you entrepreneurs grow. And she is an absolute rock star who always helps you understand that while the tax code isn't fair, there's opportunity as a business owner. Catrina Craft, welcome back to the show.
Thank you, Vincent. I'm glad you invited me back.
I'm excited for this, and be sure, everyone, to go back and check out the first 2 episodes in her series, because each time she comes with us, we're not going to revisit the entire same topics, right? She's got a lot of value to add. And for today, you better buckle up, because we're going to be talking about 3 often missed tax strategies that CPAs, don't tell their clients. And you may be thinking, I already have a CPA, but trust me, gaining perspective from as many as you can will help you immensely. And again, today, you're going to learn a lot of things that are overlooked, even if you are working with a professional. We're brought to you today by ComingAlivePodcastProduction.com. Head there today to schedule your free call. And entrepreneurs, again, I'm really excited about this because she brings the passion, she brings the value, and she brings tips for you to succeed on this entrepreneurial journey. So with that, we have to dive in, Katrina. Let's do our first overlooked strategy that CPAs don't tell their clients.
And I definitely want to talk about, I am a CPA. So this is not CPA bashing, but this is showing you the difference between a tax strategist and a CPA. So if you are every year revisiting your tax strategy and doing the same thing, you are not using a proper strategy. What you're doing is doing compliance work. We want to make sure that when we look at strategy, you're looking at a 3 to 5 year process. So that involves forecasting, that involves modeling, that involves looking at your goals to see where you're going to be. Most CPAs are not doing that. First of all, tax time, too busy. You have hundreds to thousands of tax returns you're trying to file and be compliant with. Has nothing to do with strategy. We want to look at what can we do to grow your wealth and to let you pay more taxes in your business. So that's one thing that you need to realize. So it's nothing wrong with a CPA that's doing your compliance, but you need a strategist that's going to help you build something totally different. So the first thing I like to talk about is stop the simple strategies. Do a S-Corp. Okay, so you may hear that. Let's just file a S-Corp. Well, a S-Corp may not be the best strategy for you. And let's talk about tax strategies that allow entity stacking. So entity stacking is having a C-Corp and an S-Corp, where the C-Corp has one functionality and it could have a tax year end that's different. The C-Corp allows you to structure and have a tax year that's not a calendar year. That allows you to move income between years. So say, for instance, you have at the end of the year, hopefully this was not your case and you didn't do anything about it, but at the end of the year, you had $100,000 profit in your business. You could have set up a marketing company. If you do marketing, I work with a lot of clients and they spend lots of money on marketing. You could have set up a C-Corp. That's a marketing company. Your S-Corp paid your C-Corp, but now your C-Corp has a different year end. So we're pushing money from one year to another year to delay and give you time to really utilize the tax code to maximize those expenses. So I love income shifting as far as with years. I love income shifting with family members as well. So that's another trick and tip that a lot of CPAs are not telling you, that your children and your family members that you're supporting. So not only just your children, you may be supporting also other family members. If they could work in your business, allow them to work in your business. Instead of giving them a gift, give them a job. And then you're writing off those deductions, and they are probably in a lower tax bracket than you, that's income shifting. So shifting from your higher tax income to their lower, especially with children, it works wonderful. And then if you're supporting other people, like I hired my mother. So she helped me with marketing. She's excellent in marketing and sales. So I hired my mother, and that was a great way for me to shift income as well. So those are a couple of the tips that I like to talk about.
Yes, and I like how we're starting it out here with these first tips. Everyone see how simple they seem, but not many are knowing about them, let alone utilizing them. So if there's anyone out there who is a business owner and you've got young kids, she just crafted an amazing idea for you to help a whole great deal. So be sure to stick around to the end of the episode again so you find out exactly how to book a call with her, exactly how to get in touch with her. Income shifting, right? All of these things, they may be new terms, but don't worry. She is here to help. She is available again. So stick around to the end because we are just getting started. So I don't even know what to expect with this next tip, but it's going to have to step it up because that was such a good opener right there.
The next tip is stop chasing revenue. I know that everybody wants more money, but then if you're just making more money to pay more taxes, that's not a strategy. What you need to realize is that when you're paying more in taxes, you're not building your wealth. So a lot of times CPAs are just telling you, if you make more money, you just have to pay the piper. That is not the case. What we want to do is use that additional revenue to then invest in wealth building vehicles. I love real estate. I'm a real estate investor as well, have multiple properties. You can use the tax code and use a cost segregation. That's a different type of strategy that you use in your business if you have real estate to maximize deductions. I just had a client, and what we did with her, she had profitability in her business. She bought a real estate property. We did cost segregation, so the property was $200,000. She got an immediate write-off of 35% by doing a cost segregation. That reduced her income. And because she was a real estate professional, she was able to take 100% of that deduction. So using different advanced wealth strategies is not just about tax savings. It's about how are you using those savings to grow your wealth. I have clients that invest in oil and gas. So oil and gas is another way that you can maximize your deduction in the first year up to 80%. So you have depletion, you have depreciation, and in oil and gas, you also are allowed to deduct some of the expenses for operating and equipment. So I love just using additional strategies because we have wealthy people. Stop paying the IRS. Start using that money to invest to grow your wealth. So I love just using other strategies. Instead of sending it to the IRS, send it to yourself and wealth building. Another investment that I love right now, entertainment production. I don't know if you've heard film production, great strategy. So if you have not heard about it, look it up or come to me and I'll tell you more about how you can do it. But it's a great way. You invest in a film and you get a huge deduction, like dollars for every dollar you invest, you can get extra deduction. And so it's really great way to maximize your savings. Instead of paying to the IRS, invest in something that is going to really give you a deduction and give you money back in your pocket.
I absolutely love that. That's something that's even new to me, everyone. We are just scratching the tip of the surface with the value she can add. Does this have to be like Hollywood movies? Can this be independent films? Or can you give just a little bit more there? Because I know if it's new to me, it may be new to someone else as well.
Yes, it could be independent films. I had a client that did an independent film, was looking for investors. And with the strategy of knowing go to investors and give them this strategy. You're going to get more investors based on that. I love the idea of people that have a passion for film and going after investors, letting them know about the film credits and these investments that you can do. It makes a stronger case for you to seek out investors.
Yeah, I
And it
absolutely.
really depends. Yeah, it depends on the scenario of which, what you're trying to do is always the end goal that's important. And how much money do you have in your pocket as far as trying to save with taxes and those tax credits? Because if you don't have any money that you need to pay the IRS, then these credits are not going to work for you. Don't invest because you're already not paying any money to the IRS. So it needs to make sense for you as a whole. And so it's not general knowledge because it really is going to make sense only those people that have the funds that are owing to the IRS.
And I love those strategies, everyone. You took the question from me. You said, I like this next one because I was going to ask. We got real estate. We've got some film production. We started out talking about income shifting and spreading it around the family. Everyone, she brought up C-Corp, S-Corp back on her first episode of the series. Go back there. We actually introduced the different types of entities to see what would be best for you. So all of that value is still there. She's got a lot of value and videos up on the internet. We'll get her website later. So stay tuned there. I'm ready for another tip, but I want to take a quick break here and get everyone back on your page here, just in case they missed that first show. What led you to want to be this powerhouse entrepreneur accountant?
The stories, it's short. I'll make it short. It's a long story, but I'll make it short. I attended a Robert Kiyosaki event, and he's the author of Rich Dad, Poor Dad. His tax strategist was on the stage giving all these wonderful tax strategies that I had never heard of. I'm a CPA. I had gotten my master's in taxation, but these strategies were the strategies that the top 1% were using because
Right.
she worked in that field. So I just said, I want to learn everything that I'm a seeker of knowledge. So I'm always studying. If I had to count how many hours I've studied in taxation and just learning, it would just be crazy. And so I want to know everything that you know. And we developed a partnership and I started working with the top 1%. Realized that everybody did not have this knowledge. They didn't have the money to first pay tax strategists. They didn't have the knowledge to know who to go to,
Mm.
and they didn't know what questions to ask. So that's what gave me the idea that I needed to work with entrepreneurs who are making money, but they're not utilizing the tax code to their benefit because the tax code is designed to help business owners and investors. And I wanted to provide that knowledge to more people.
And I know everyone is grateful, especially your clients and everyone tuning in today. Everyone, no matter what, you're going to owe taxes if you're making money, but there are ways to go about it that can make you a stronger business owner. And we've touched on a few again today. We've touched on a few every episode. And as you're gathering audience each week, we have these themes already planned out, right? So there's just continued value coming your way, especially now. Q1, there it's a busy time. So now that will lead us directly into your third tip here. And again, thank you for sharing that bit of your story again. It's always inspiring to me, and I hope it does the same for everyone here.
So the third tip, I don't know if people have heard about family management offices. Family offices or management offices. When we talk about hiring your family and developing wealth that are long-term generational wealth, that's how wealthy families do it. They have family offices. They come together. They have payroll for their family members. They invest in businesses. The businesses grow and they grow their wealth. And so it's coming together instead of operating by themselves. The benefit of that, as far as tax strategies, now if you travel together, that's a business expense because now you're having meetings with your board. They're your board. If you purchase a home, that could be a business office, or you can write off a large percent of that or use the Augusta rule to have 14 days of meetings. That is a deduction for you and your family office. So now you start looking at we have this family office that the family is a part of. How can we use it to fund and to make deductions to grow the income, but then to also have expenses? So now your Christmas dinner is no longer Christmas dinner. It's a meeting. And you need to make sure that you're discussing business 4 hours out of that day. But say if you want that meeting in Hawaii, why not? You can do that because if you have certain type of structures, you're required to have board meetings. You're required to have the meetings and make sure that you have all of these organizational structures in place. That's a great way to do it. A lot of people are not doing family offices. They're not doing management companies. And these are ways to really shift income to a different type of company and grow your wealth among family so you have a legacy.
I love the idea even of bringing in your family. You mentioned you work with your mom. I think that's a good goal for me as my mom heads towards retirement, doing things together. And then she just made great points. Wow, what if we wanted to do Christmas in Hawaii? We're bringing the family. We're going to work a little bit and make it a dual trip. So I absolutely love that. And I know that something that you always say, and I absolutely love it too, that financial freedom is a lie without a plan. You went through a significant change at that point. We've got a few minutes here, so I'd love to round out with such an inspiring message because of how far you've come since this.
Yeah. So what happened? I put all of my eggs in one basket. I had one major client that was providing 80% of my income. So first I learned, don't put all your eggs in one basket. Have multiple clients and multiple sources of income. Thus, I did start investing in real estate. So if the economy shifted for accountants, some businesses, especially digital marketing agencies, may be suffering now just with AI and how things change. You need to have a different form of revenue. That's why I do the real estate. We talked about the income maybe from the film production. Sometimes films can make money. Most of the time they don't. But just different ways and sources of revenue is just smart. And I learned that because when I lost that client that provided 80% of my revenue, I became in debt and I had just purchased a house. I didn't know what to do, but I stayed focused. First of all, I knew that God had given me this passion. And I think it was your testimony is brought from your trial. And so that was a trial for me. But then I know so many business owners feel like can't make it. They stumble, but just get back up. And so that was something that I learned. And then I learned how the wealthy do it. I learned about real estate. I started investing in real estate. I grew my firm and just started working with entrepreneurs that I love working with. I love working with creatives and work with entertainers and Grammy Award winners. I work with New York Times bestsellers, and I just love that energy. So right brain, left brain for me. And I just love doing creative tax strategies with creatives
Well, I love
and
what you said.
professional service providers.
You
Yes.
said something really important there. It's something I've adapted over the last years or so, working with the right people, right? Working with the entrepreneurs that are going to inspire you. And it's been an absolute honor to get you on that entrepreneur show because of the value you came prepared to air, right? You were ready to give this. You said, Vince, we're not doing one, right? So we're making this a very special bonus series, we could say, here on that entrepreneur show. We talked about income shifting today. We talked about so much. We talked about other ways to invest your money, whether real estate, film production. As I said, that was such a remarkable tip because that's very new to me. And everyone, she teased it before very humbly. She has a lot of experience working with the top 1% to find you those tax strategies that may not be on your Google search, right? With your accountant, your CPA. And I love, again, the humble saying where we're not bashing CPAs. I am a CPA. We're just finding a better way to do it for entrepreneurs. And I'm really excited to get you back here for your next episode. Do we want to give a teaser of what to expect on the next show, or are we going to let them be surprised?
I think we're going to be surprised because I'm going to dig deep in my vault. I'm going to find some juicy topics.
Yes. And again, everyone, this is episode 3. So be sure to go back in the episode directory, excuse me, Check out her first two because we're talking about unique and different tips and strategies and everything in between when she grabs the mic here. Katrina, I can't thank you enough for carving time out of your day to make time to give back to our amazing audience here at That Entrepreneur Show. Where can we find you online?
So find me online at Kraft Money Map, craftmoneymap.com. You'll find more about how I implement tax strategies, how I'm different, and I always give great tips. So sign up for my wealth and tax tips letter that I submit weekly to your inbox.
And that is available on your website to sign up?
That is available on my website.
All right, everyone, that's Kraft with a C, and be sure to go check out all of the great value she has online. And of course, please remember to subscribe to stay current so you don't miss her next episode and the other entrepreneurs coming your way. We are at That Entrepreneur Show on all social media, and my name is Vincent A. Lancey. You can say hi to me anywhere online, and we're brought to you again by ComingAlivePodcastProduction.com. Get your journey started today by scheduling a free call online. And with that, Katrina, all 3 episodes have been unbelievably valuable for our audience. I can't thank you enough, and I already am excited to get our next call underway. Thank you so much.
Thank you. It's been a pleasure as always.
Yes, always a great time together. Thank you. Thank you for tuning in to another episode. I would love to hear your feedback. What did you love? What do you want to see more of? Are there any questions you would like me to ask the guests who come on the show? This show is not possible without you, the amazing listeners, so please email us at podcastsbylancey@gmail.com and let us know what you think. We'll also feature you on a later show. Please remember to subscribe to stay current with our amazing community of guests who will continue to come on the show, sprinkled in with solo episodes from me, Vincent A. Lancey. With that, I look forward to introducing more shows to you each and every week. And with that, we're signing off today. Enjoy the episodes and make it a great day ahead.